If you wonder what led the recent surge in Bitcoin price to near one-year high, let me help you understand the reason for the same. There are dozens of factors that led the rally in Bitcoin, but the key catalyst behind several financial biggies joining the race of launching the spot Bitcoin-based exchange-traded funds, or the ETF. As we know, ETFs, the bundled securities like stocks and commodities, allow investors to take exposure in underlying securities indirectly and dodge the vagaries such as exposure risk, regulatory issues, and etc. Given the rise in investor appetite for cryptocurrencies such as Bitcoin, who has stayed the test of time, a large number of traditional companies have made plans of launching spot Bitcoin-backed exchange-traded fund products. There is a lot of buzz around this, with a number of companies preparing to enter the virtual currency ecosystem. According to a report by Block, Fidelity Investments, one of the biggest asset manager companies in the US, is possibly on the verge of submitting a request for the approval of their own spot Bitcoin ETF. That's what the reports have suggested. Soon after BlackRock submitted a request to create a spot Bitcoin ETF, other financial giants such as Invesco, WisdomTree, and Bitwise evinced their interest to offer similar products. Clearly, the race for the other ETFs have just begun. There is a strong investor appetite for such products. In fact, the retail participation has increased in the cryptocurrency space following the Black Swan events in the United States, where several lenders faced investor ire after the fall of three major lenders in the US, such as Silicon Valley Bank, Signature Bank, and the Silvergate Bank. Many lenders still operate under the shadow of the possible bank runs, making investments, deposits in them highly risky. Hence, the demand for the alternative investments class such as crypto has grown manifold. However, the regulatory activities has intensified against the crypto exchanges that are pulled up by the US Securities and Exchange Commission for offering unregulated products. A case in point in Binance, the world's largest crypto exchange, and Coinbase, the only listed company with the SEC approval. The regulator alleged these exchanges for offering products that lack regulatory approvals. As a result, investors are left with little option, but seek refuge in other masked products.
So I think it's not a kind of ETF because even there are lots of clarification from the finance, like is a different kind of instrument or different kind of thing. It's not actually the government or US is approving as a crypto as asset. So, but I believe like there are regulators coming up we have seen the MiCA regulator, or we have seen the VARA regulator coming into Dubai. So I think it's going to be the good future about the tokenization, or especially crypto when we declare crypto as asset.
The situation is perfectly ripe for the financial service providers such as BlackRock, Invesco, WisdomTree, and others to explore the opportunity in adversity. According to the market grapevine, asset management giant Fidelity is readying to foray in the ETF space through offering spot Bitcoin-backed ETF. It must be noted that earlier in 2022, Fidelity Corp has approached SEC with an ETF proposal. However, the Securities Exchange Commission rejected Fidelity's ETF filing. Host of other financial biggies have joined the race of ETF filing. ARK Investment Management submitted a comparable application to the Securities and Exchange Commission before BlackRock did so for its own spot Bitcoin ETF. Cathie Wood, the famous investor, reported earlier in the month of April. The flurry of ETF filing pushed price of the largest cryptocurrency, Bitcoin, by more than 20% in the past 7 days. For the year today, Bitcoin price have jumped 80%. Well, considering the SEC's track record, the future of ETF hangs in balance for now. The SEC has long opposed the creation of a spot Bitcoin ETF. It permitted trading in ETF that are based on valuations of the cryptocurrency futures contracts. Maybe this time SEC may have taken a different approach, but fingers crossed. That's it from today's special segment. This is Manoj Dara signing off, but keep watching 3.0 TV for more such interesting analysis. Thank you.